Pleasure to welcome you all to our Ask Me Anything session on algorithmic trading. With us today is our very own Mr. Nitesh Khandelwal, director at QuantInsti. Nitesh co-founded QuantInsti in 2010 as a part of iRage, which was one of the leading edge high-frequency trading firms in India. Ever since, QuantInsti has been working towards bringing knowledge and access to scientific and technology-oriented trading to the masses and institutions across the globe, and has already been helping its registered users from 200 plus countries and territories in achieving the same. While Nitesh is a very calm and reserved person in general, he never shies off when it comes to sharing his knowledge and expertise in algorithmic trading in some of the most popular platforms and publications such as CNBC TV 18, Business World, Entrepreneur, Business Insider, and more. He is the driving force behind QuantInsti's success in the algorithmic trading education field today, and it is my absolute pleasure to introduce him to you all. And I'm sure it's going to be one valuable session for all of you out here. So, yeah, Nitesh, over to you.
Thank you so much. Thank you so much, Pawan, for the kind words in introduction. Um, so, hello everyone. I welcome you all to this session on Ask Me Anything, session on algorithmic and quantitative trading. This is our second Ask Me Anything session. I think the last one was sometime in December 2017. So almost 3.5 years, 3.5 years since the last session, and been it's been something like a dream journey since then. It's been a long time since we the kind of things that have happened since then, and yeah, I think a lot has happened in this industry. So I'm really keen and glad to be able to take this session, and I'm really looking forward to some really amazing interaction with all of you here. So welcome you all, and before we start, I would also like to convey my best wishes to everyone. I really hope that everyone is doing well. Everyone in your family has been doing well. Over the last year, I think it's kind of eerie deja vu that we have been seeing since the last few days over here, especially, and we really hope that things move on for better than for anything negative. So with that hope and with those wishes, I welcome you all. And just to give you a brief idea about this session today, what we will be doing is we have received numerous number of questions, like huge number of questions, and from different geographies. I think we got questions from more than from participants from more than 50 different countries for this session today. So what we will be, the key challenges for us would be to make sure that whatever we are covering stays relevant for as many people as possible, and is relevant from the context of different geographies, different asset classes, and also while trying to maintain that, we'll also be trying to address the specific queries specific to individuals as well, which I think many of us may be able to relate with ourselves. So that's the idea. And the format, before we start, I think on the questions, just a brief background about us. As Pawan mentioned, that I'm the co-founder for iRage and QuantInsti. As at a group level, we are a group which focuses primarily into the quant and algo trading space through our different ventures. We have a high frequency trading and proprietary trading vertical. We have which is a clearing member in itself. So we are the clearing member and trading members of the exchanges over here. We also have the asset management business, which is separate from that. We also have, in addition to that, on the QuantInsti side, there are different different initiatives that we have, including the executive program Algorithmic Trading, which is a 6-month-long certification program focused on Algo and Quant trading targeted towards working professionals. Weekends only, 6-month program. Then we have Contra, which was an initiative that we took a few years back in 2017. And it's something which is more of a self-paced learning portal, slightly different from other portals in the way that it's more hands-on, and you actually can even go ahead and do paper trading and live trading. We have a few 10,000 users who are already using it, so we are really keen to now go out and start adding more value through Blue Shift channel for a wider audience now. So that's about the ecosystem, and of course we have worked on over the last 10 years or so. We have worked on a lot of developing a lot of resources, which has helped more than like even now it helps more than 1 million people every year across the globe. And I think the books, the open source books, the webinars, the blogs, the courses. So that's something that all focuses on the quant and algo trading space. And um, I, we like to believe that it does add a good amount of value add to our users, and get them more exposure in this wonderful domain of algo and quant trading. We got a huge number of questions. Now, with that, what we wanted to make sure that okay, I saw some queries that I'm not audible. I hope that was temporary and I'm audible to everyone now.
Yes, Nitesh, you are. So it was just a brief moment wherein you weren't audible, but now it's
Okay,
perfectly fine. Yeah.
got it. All right, thanks, Pawan. All right, so so what, as I mentioned, that we got huge number of questions, and what we thought was that we also wanted to make sure that the people who are attending the session live, we are also taking the live questions from them, and also addressing using the questions that we have received to come up with the question categories which can address the wider range of queries. Okay, so that was the idea, and with that in mind, we created certain categories of questions, which include what is algorithmic trading, how and where to get the data, what can be coded and what cannot be, what kind of platforms are available, what are the skills an algo and quant trader needs, applications of machine learning in trading, and what is the profitability. So these are some of the 7 top categories that we saw from the questions that we had received, and we thought that okay, let's group the questions together, and we will cover them one by one in terms of the category wise, and then in between the questions, we'll also be taking the questions from the audience, from you, all of you as well. So that's the idea. The idea is to maximize the number of questions that we can address, both from what we have received as well as what we'll be receiving here from you on chat. Great, so let's get started. So what is algorithmic trading? Now, algorithmic trading is interesting. It's got an interesting definition. Interesting, why? Because almost anyone who is active in this domain and who comes from different geography might be looking at a different definition of algorithmic trading. SEBI in India defines algorithmic trading as any order that is generated using automated execution logic shall be known as algorithmic trading. Okay, full automation, if it is there, algorithmic trading. MiFID II in Europe or FC in UK, they define it more on the lines of that if you are using algorithms during any stage or any phase of the strategy building and deployment process, it can be deployed. It can be specified as algorithmic trading. FINRA in US specifies or looks at algorithmic trading more from the perspective of high frequency trading, right? So which looks at very minute level opportunities and tries to make use of them while chasing for alpha or for execution. So which one do we pick? Whichever geography we are in, we pick that. So that's okay. But from the higher perspective, what we look at algorithmic trading is essentially the word in itself has algorithm in it. So what it means is that when you're using algorithms in your trading processes, you are in some way doing algorithmic trading. Algorithmic trading in itself, it's not a different way of trading. A way, yes, but more in terms of execution. Okay, more in terms of approach. So how you're approaching algorithmic trading, how you're approaching trading, which is by using algorithms. Okay, so that's something that we generally look at while looking for algorithmic trading. When it is automated trading, what we are looking at is that it's completely automated, and we have algorithms, of course, being used for that, but it's completely automated. In fact, I think my colleagues might be sharing some of the links that can help you to go in vast details on algorithmic trading. So that's something which I believe uh, defines at the broad level that what algorithmic trading is. Now, how and where to get the data? Now, it's these are some of the questions we have slightly modified them, but overall, this is these are some of the questions that I just picked up from the list. There are a lot many from on the market data, because this is a very big problem that most of the people face who are trying to use algorithms or trying to do systematic trading. Where to get the good quality data from, how to get market data, where to get it, which are the more reliable data vendors or data sources, where can I get real-time data, where can I get historical data, how to use it in Python, all these questions. So there's a bit of a mess out there, honestly, when it comes to data, and it's really difficult to get the quality data that you can get from there. These are some of the data points that we have tried to put in for stock data, which is the most sought after. There are certain sources like Yahoo Finance and Google Finance, QuantInsti, um, and what we also have is fundamental data, like which you can get from Yahoo, Simfin, Sharader. A lot of these sources are free, a lot of them are paid. Now, what we have seen is that you might be very keen to go for you might be keen to go for a very, you can say, high quality data, and you're trying to get it free. It might be difficult. There are very few places where you can get really high quality data for free. So paid data sources might be one of the main options there. But yeah, what you can always do is you can always get the data, especially the time series data, which is your the equity or stock market, the open high low close, or the transaction data, essentially. You can get it well, the market data, you can get it from your broker, and most of the brokers are across the globe are allowed to share data to their clients for free or for a very nominal fee. So that's the one key source of data that you can, or that you should explore if you are doing it at an individual level, the trading. There are a few like InvestPy. Quandl has a lot of free as well as paid data sources. It's pretty interesting. InvestPy, again, a library for TradingView, I believe. So where you can get or pull data using this library for various markets. And then you have different types of data. So stock data is one thing, which is obviously the most fundamental requirement. But what we also have is the fundamental data itself, like the P by E ratio or the balance sheet data, other things which you might want to pull directly into your codes, right, into your algorithms, which many of the platforms do allow now, or the macroeconomic data, right? So that you have World Bank, OECD, Eurostat, RBI, which is Reserve Bank of India, and many other sources which are there. Earnings calendar is essentially your the earning, which is the company earnings, the reports, annual reports, the quarterly reports, which are there. So earning calendar, which might be useful for a lot of strategies. So that's something which is relevant. Then what we also see here is the financial news data, which is pulling in the news from different sources. Kaggle is something which has got huge number of news and data sets, so it's something which is of high interest. Sentiment data, this is something which is becoming more and more popular. In fact, sentiment data is something that uh, we launched something called EPAT NSA sometime back in January this year. So which is a specialization program just for the EPAT participants. So EPAT news sentiment analysis and alternative data. So that's the program. Now there it purely focuses, the whole specialization focuses on the sentiment analysis and the alternative data and news analysis, right? So how to use that using different algorithms, how to use that in your strategies. So it's a domain which is growing really fast, and it's something which is pretty interesting. So sentiment data is offered by many different vendors. Refinitiv, which is your erstwhile Thomson Reuters, Bloomberg, Ravenpack, MarketSpsych, a lot of them. Futures data, you can get it from Yahoo as well as Quandl. Bar charts is another source. Spot market data, you can get it from the exchanges as well as EIA. Crypto, there are a lot of them. Binance is just one of them that we have just mentioned over here. FX, you can spot FX you can get from the CFD players or FXCM or Yahoo Finance. And Indian options, because there were a lot of questions around that, so that's why I mentioned here. So you can get it from the NSE website or NSE itself or NSEPY. Please mind it that some of it might not be might be skipping data at times, and the quality can be a concern. One frequent question that comes in is how to figure out that how's the quality of data, who will be a good quality source for getting the data. Interesting thing is that's personal experience, and I'm kind of generalizing it, but there are a lot of exceptions, so take it with a pinch of salt. But the older data sources, so when it comes to the quality data, what we have seen is that it's a lot of legwork, a lot of hard work where you have to manually clean huge amount of data. Now, the firms which have been there for many decades, they have been doing that legwork, and they have now created a very amazing or high quality data, which is great. The newer firms, which are more tech driven, they have used very nicely used the technology and the different algorithms to clean the data. But what happens is that there are huge number of exceptions which remain. So they are still might find the data gaps might be there at times for those firms, which is now the answer would have been very easy that okay, in that case go for the older firms. But there is another problem. Another problem is that if you have the old firms who have really high quality data, they have not been able to come up with the interfaces where you can pull the data or use the data or consume the data with that much ease, which the newer firm has done a tremendous job because they are very tech savvy. So what to do? So that's where the optimization problem begins, that you have to figure out what your exact data requirements are. How sensitive are you to the like extremely paranoid level clean data, or is it something that is more of you can do with the approximately good data? So all those factors will play a big role. Just a disclaimer, this list here is a non-exhaustive list, and it is not in order of any quality or correctness metric. We do not have any association with any of these firms, and we in terms of the data providing, so we do not take any liability for any correctness of the data or any sources or the quality of the data overall. So please, you'll have to do your homework a bit, but these can be some really good starting points, I believe. Okay, so that's about the data, where to get it from. Next question that we got a lot is coding and what can be coded. Okay, so a few questions like, is it possible to code accordingly for pattern recognition like double top bottom, head and shoulders, flags and pennants, etc. in different stocks and set signals accordingly to get an alert among hundreds of stocks? What language do you use when constructing a new algo? Which one do you choose, R or Python? Is C++ the required language? What are the limitations of a no-code algo trading platform? So there were lot many which can be pretty much concised or put together in these variations of these questions. Now, first thing first, what can be coded? Whatever you can think of, you think of in a certain logical manner. So does the computers in a binary way. Okay, we obviously, our brains are way more complex as even the most advanced computers, but they're getting there. So whatever you can think of, that can be coded, plain and simple. But can it be coded with extreme ease? Like, it can be a very simple strategy or very simple idea in your mind, but it might be a nightmare to code it. Okay, because what is needed is that in a programming language, you need certain level of clarity, huge amount of clarity which is needed. Okay, and for the system, so that's why you might have heard of most of the coders or programmers, they write pseudocode before writing a code, right? So which are small chunks of overall logic, that this is how it will go, and then you start programming, because you cannot leave anything unturned, right? So everything has to be covered while programming, while writing down a code, otherwise it will be disastrous, right? So that's there. Now, what are the easiest programs to code? Anything which is a basic formula, say all your technical indicators, or any filters, right? Or any if else based conditional strategies, right? So if this happens, then do this. If the market goes to this level, then do this. Whatever, all those things, they are like really simple. You can do them very, very easily. Now, another thing can be that, okay, that's all right, but if I want to either go a bit abstract, which is the first question here, which is looking at the pattern recognition or the waves. Now the thing is, till the time you can give the rules, that's okay. All right, so till the time you're able to define it for your code, that's pretty much doable. It's not very difficult. It will be slightly difficult as compared to just doing a technical indicator, but it's not that difficult. And there has been tools and platforms which has been doing it for like long ago. When we started, there was this, I think they are still there, Recognia, which I think Bloomberg acquired, if I'm not wrong. I don't recall, but yeah, but Recognia used to do that where you will be you set what kind of patterns you're looking for, and you set the investment universe or the stock universe, and it will keep on giving out alerts. And this was pre 2010, right? So more than 10, 11, 12 years back. um, Today there are a lot of libraries which are out there where you can use them to identify the patterns. Okay, identify various technical patterns which are already defined in those libraries, or you can create your own where you have defining the libraries. Now, defining the patterns. Now, interesting thing is that now, with the advent of machine learning, a lot of people are also using or taking the help of machine learning to identify the patterns. Now, the good part is that since the patterns are more or less already defined, so you can use most of the supervised learning algorithms themselves, right? So they are way less complex as compared to, say, the other ones, unsupervised ones. Not complexity, but yeah, it's more easier to imagine, I guess. So you can even use those techniques for building or training your models for identifying the patterns and generating the alerts or the trading signals itself. Okay, So that's there. Now, another thing is often about the different languages. Should I be using R? Should I be using C++? Should I be using Python? Now, programming languages keeps on changing. Okay, keeps on changing as in the which one is the most popular or the relevant one in the industry, that keeps on changing. There was a time when we started EPAT way back in 2010. C++ ruled the roost. Algo trading meant, for that time, it meant high frequency trading. There was hardly any other use cases for algorithmic trading because there was a lot of alpha which was still out there for Indian markets, and the same thing which would have happened in the late 80s and early 90s in US markets as well. So at that time, if you were doing it, the speed was the thing that would give you that alpha. And if it is about speed, then C++ was one of the best languages which were available at that time in the mainstream, which were way faster as compared to all the other most other languages. So C++ is what used to be covered even in the EPAT program at that time. But over time, the algo trading spread more to the non-institutional, non-prop players as well, which is the retail professional traders as well as the individual traders. So we started seeing a lot of action from their end. And why it was happening was because it was no longer just an arms race in terms of these fastest player wins, but also in terms of creating or generating the different sources of alpha using the different modules, especially using the data science modules which were available, right? And that revolution across industries, not just in the financial markets, but across industries, was being led by Python. Okay, so Python came to the fore, to the front, and it started replacing the other languages as the language of choice for most of the industry players across different industries as well as in the financial markets. Another thing that Python did was, with the advent and the spread of Python, since it was being used for across the ecosystem, not just for the execution side, just to create execution algorithms, but even for the analysis, even for the statistical backtesting, right? So all those things, what it also ended up doing was that it also replaced R. Okay, so R used to be extremely popular for statistical analysis, and it's a wonderful language. Like so those of you who have been on the programming side and for quite some time now and have done statistical analysis, say at least for more than 10 years, you might be a big lover of R. And but the problem is that one language wins generally, right? So Python, since it was becoming more and more popular, so it has dwarfed up upon R as well now. So yeah, so our Python is the language of choice these days, at least. And I believe we will be the days of Python will continue to be there for at least in the foreseeable future, uh, thanks to it being open source and extensive usage in data science and machine learning. So that's there. Now, another question is limitations of a no-code algo trading platform. So this was another very popular question which comes through. Now, the thing is that it doesn't matter whether it's a coding platform or no-code trading platform. What matters is whether a platform which you have, is it a rule-based engine or is it a CP engine, right? So what do we mean by that? A rule-based engine does, like, you give it certain inputs that if this, then do this. Okay, so rule-based engine will do that, which means that it's great, but you cannot do a lot of things, or you cannot try out different strategy ideas over there. So your strategy universe is always going to be limited. If it is a CEP engine, complex event processing engine, which means that it has memory, it has a more advanced level of analyzing things and strategy building that you can do. So you can integrate machine learning algorithms, not just from the perspective of using the machine learning algorithms output, which is again a rule-based engine, right? So which is again if else, but if you want to even create those systems or use the libraries directly on those systems. So there, for that you will need a CEP engine. If you need, say, if you want to know that your strategy input or the strategy is based on what your strategy did X amount, X time back, and Y trades back, right? A combination of that, and you want to use that in the current in the current time while executing, then a rule-based engine will not do. So that's the key difference. Otherwise, whether it's code, no code, till the time it addresses your requirements, doesn't matter. It's more of whether what is the universe of strategies or strategy paradigms that you can work on that platform. So yeah. So that's there. So let me take a few questions from before we go ahead. Let me take a few questions from the audience over here. Okay. So how much does it cost for a DMA lease line to connect to NSE? Also, what all is required to set up a co-location for doing algo trading directly with NSE? What do you think about the scope of arbitrage opportunities currently in India market with good infrastructure in place? Now, I think the last part. Okay, let's do first the first part. So the DML lease line, I think there are different costs which are involved. One is for the market data tick by tick date line, which is about 100,000 INR, which is about $1,300 approximately US dollars per year. And then you have the cost of a message line. So depending on how what kind of strategy you have, Puneet. So if your strategy is like needs to send 200 messages per second, then the costing of that would be somewhere around 500,000 rupees per annum, right? So that's about $7,000 per year. If it is 400 messages per second that you need, then it would be nearly a million INR, which is about 13,000 US dollars. So that's there. Then the second is colocation. So to set up a colocation, what you need is you need to apply, you need to get a space. And on NSE, I think you'd get half rack and full rack. So half rack cost you about 600,000 INR, which is about 9,000, $8,500 per year, which is 21 units. So that's there. And yeah, if for otherwise for full rack, that would be almost double of it. So that's about the cost part and the scope of arbitrage opportunities currently in India market with the good infrastructure. Now, the thing is, what do you mean by arbitrage? If you are referring to arbitrage as the classic arbitrage, which is no risk arbitrage, no market risk arbitrage at all, then I think the opportunities are very limited, or there are opportunities, but the kind of infrastructure that you need, which will be really super high speed, so that would be needed, because that's extremely competitive, which means that you might have to go for hardware based algorithmic trading system as well, so no operating system, FPGA and other things, and also really fast lines and other things, which might be in case if you're just starting off, it might be prohibitive. If you already have a setup, you want to explore, then yes, you can try that. It's expensive, but of course, if you have that, then if you can compete on that side, then definitely you will have certain opportunities. Opportunities are always going to be there, right? So it's just that it becomes more competitive, which means that the returns might keep on getting low, or the latency requirement may keep on getting higher. Okay. All right. Should students of quant trading eventually choose a subcategory or specialty such as high frequency trading, predictive analytics, machine learning, mathematical finance, etc., or should we try to learn them all? So, Kevin, what happens is that you need to get a good foundation all across. So like, for example, in EPAT, we cover not just the programming aspect of it, or just the statistical aspect of it, or the financial markets aspect of it. No. So it's a culmination of all those three things, plus a lot of other things, which is how to set up a desk, or how to use different platforms, or different API exposure to exposing yourself to different APIs. All those things are quite important to get the ground level understanding. Once you have that, once you have a semi-expert level understanding, at least if not the expert level, then you can go and choose towards going for more deeper specialization or understanding of a particular thing. So if you were that, okay, I want to just use machine learning and I want to specialize on that, to help with all other things, I don't really care, why should I bother about that? Which is okay. You can definitely think on those lines, but the problem is that a lot of things are heavily interrelated. If you do not know, as a machine learning engineer, if you are not aware of what goes on inside a trading platform, okay, what are the different parts of trading platform, you might be, when you are making decisions on where to put your database on, right, or where to pull, or what kind of data you should be pulling on, right? So you might be making a lot of wrong decisions because you don't have exposure to the basic system architecture, right? So all those things do matter a lot, and I think what I suggest is to have a very good global understanding, good foundation, and then go move towards the specialization. Okay, all right. What all licenses would need to run factor portfolios and manage money for investors in a digitized fashion, pushing trades to a broker API powered by periodic rebalancing. So I think, Ramesh, the question here is more from the perspective of the licenses. If the licenses is, and you have mentioned that to manage the money for investors. So I think first thing is you need to have a license for managing other people's money. Okay, so there are different in case, so depending on which geography you're based in, so there are different setups. There are something called managed accounts in US, or portfolio management services in India, or hedge fund or AIF. So AIF, alternative investment funds, as hedge funds are called in Europe and in parts of Europe and in India, hedge funds in various US and other parts of the globe, many other parts of the globe. So each one has its own merits and own requirements and own limitations in terms of what can be done, what cannot be done. Hedge funds are relatively more, you can say, allowed to do more things as compared to, say, a mutual fund. It depends on whose money you are managing. So if you are managing money of a regular Joe, retail person, who might be putting in, say, just $1 or $2, as low as an amount as that in a SIP or in a mutual fund, then obviously the regulators have much higher compliance requirements, and the kind of things that you can do will be way less as compared to if you are only allowed to take money from people who are multimillionaires and have a very good exposure, so which is to the financial markets, which is generally the case for hedge funds. So in that case, the requirements and the restrictions would be far less. Okay, I'll take a couple of questions more before we go ahead. Okay, which, okay, when it comes to okay, I think, uh, right, when you're testing the quality of data set, what are the most important checks you do? How do you ensure that the data that is being given to you is accurate? So first thing is that you look for discontinuities, right? So one is garbage values, which is very often very prevalent in a lot of data sets, right? So the stock which is trading at 280, and suddenly you see $280, and suddenly you see something like 280,000 as a value, which might be the problem of the system starting to read dollars as cent, right, or something like that. So which can be tricky, right? So 280 can become 28,000. So that becomes a problem, and especially when a system or a database vendor is changing uh, their what do you say? Um, the convention in which they store the data or the format in which they store the data. That's one. Second is knowing the corporate action. So if your data vendor is giving you a good amount of data points in terms of the good quality data in terms of the corporate actions. So when is the stock split happening, when is the dividend coming, when is the stock bonus coming in, all those things which are really important for stock market data, because it is possible that 280, the stock which is trading at 280 becomes 28 the next day, because there may be a split of 1:10, right? So that's possible. Now that's not a error in data, but you'll have to account for that change in your database. If your vendor is doing that, great. He might not be doing that, or he might be doing it incorrectly. So those things, those are few of the things that are looked upon to check for the sanity of the data and the quality of the data. There are a lot of other things, of course, but yeah, that generally helps. Um, okay. Any examples of CP engines? So any full-fledged algo trading platform where you are able to create all sorts of strategies in terms of cloud-based systems, even the Blue Shift, that's a CP engine. So you can, it does have memory, and it does, you can create almost all sort of trading strategies on it, even in the code environment as well, Python as well as no code environment. So machine learning or all of that, that's there. There are a few others as well, so that you might find useful. Okay. All right. What is low latency and high latency? Low latency is essentially, so latency is how much time does it take for anything to happen. So while I'm speaking and you're listening, you're hearing what I'm speaking, there's a lot of latency in between, at least a few hundred milliseconds. What we are doing is not live, right? So it's going into my computer, in my machine, in the mic, and then from there it is converting it into the bits which are being channeled through the fiber optic cables and other sources of communication, and through the internet all across the world, going to the go-to servers and then getting distributed to your individual machines, laptop, through your respective internet service providers, right? So all these things will take easily from a few milliseconds to hundreds of milliseconds, and at times second, right? So that's there. So this time which is being spent is called latency. Okay. Now same is true for when you are seeing market data that's not live. So it is something which happened a few microsecond to few hundred milliseconds back. So depending on what kind of infrastructure do you have. So if you are if you're getting stuff and sending out orders at a very fast pace, or at a very fast speed, in that case we say you have a low latency setup. If it is something which is, say, you're on cloud or on internet, then you are by default on a high latency setup. Okay, so which is your orders are going to go to like few hundred milliseconds after you send them out, right? So I hope that addresses your question. Say. Okay, so I think there are quite a few. Sorry, we'll definitely make sure that whatever questions we are getting, we will be addressing them individually. All the team over here will make sure that we are doing that, and yeah, but in the meantime, we'll try to take up as many questions as possible over here as well. So let's move on to the coding. So after the coding part, what we next need is platforms. So these are some of the questions on the yellow side what we have received. Basically these are representative questions in terms of what covers the entire, some are verbatim, some are modified to cover the entire gamut of different questions that were received. So what is the best way to backtest a strategy? I'm a small trader, how Algo helps me? Where can I take Algo platform? What are the tools and investment required to start algo trading? Also tell me about the risks associated with it. From where to start backtesting and optimizing? How does one apply algo trades? Which software is required? So essentially, we covered part of it actually in the previous question, in the last question of the previous question category. But what we get is there are different sources through which you can get a trading platform. Okay. Uh, One is through your broker. Okay, and there are a lot of platforms offered by a lot of different brokers in different parts of the world. Interactive brokers, that's like one of the most more popular ones when it comes to automated trading globally. So all these brokers, most of the brokers do have their APIs, which they have created and put it across for the usage by all their clients. Some offer it for free, some um, um, take up a very minor charge. So for that, monthly or yearly, whatever it is. So that's one way of getting the platform. Like someone asked over here, so in terms of like India, you have a lot of different brokers like Zerodha, Upstocks, or Interactive Brokers. All these guys who do offer the the platforms for algorithmic trading or for using programmatic trading. So the APIs which can be used for programmatic trading, if not full automation, but to a certain level of algorithms that can be used there. Another is the cloud-based platforms. There are a lot of cloud-based platforms which has come up, and you can categorize them into the parts where one is, as I said, that rule-based and CP, of course, yes, that's there. But what is also there is the platforms which offer you multiple choices for creating creating your codes or coding, basically different languages which they allow. There are certain platforms who also give no code platforms where you can drag and drop and create all sorts of strategies. Now, depending on what your requirement is, if your requirement is more in terms of basic rule-based strategies, then I think that works really amazingly well. If it is more in terms of trading, in terms of trading strategies, which needs a bit more of alternative data, fundamental data, and other sources of data, then you might need to have to check on cloud-based platforms which offer those data points or those data, or those kind of data, or they allow you to upload your own data and use it over there. So that would define what kind of platform, define the requirement. Your requirement would define what kind of platform that you should be using. Now, there would be a lot of people who may be not be very comfortable using cloud-based platforms, and would want to go for that. Okay, I want to have it on my own machine. So in those cases, you can go for desktop applications or open source APIs which are out there. So there are a lot of APIs which are there, which you can use, trading-based APIs which can be used for both backtesting as well as for live trading. Then of course you also have desktop applications where you can install installers which are available, which runs on your own machine, so that your thing is on with you only. So that's there. And then there are for those of you who are looking for low latency stuff, high frequency trading strategies, then you generally go for high frequency trading platforms which you can create your own, or you can get it from the different vendors which are available out there for your markets, just depending on which market you are in. So that's there. Now, the one point is that if you are a small trader, if you are just getting started, what we recommend is that, and if you do not have a very strong tech background, in that case, it's best to go ahead with the broker's API or the broker's platform, or maybe the cloud-based platforms where everything is, most of the things are already done and taken care of. You just have to create your own strategy, right? So code your own strategy using the interface. So that's there. If you are a more nuanced user, then you can pick your choice from these available platforms, or you can even use or create your own your own basic engines. Most of the In fact, there were some questions also, that how to go about creating your own trading platforms. Now, most of the brokers have started to offer something called REST API, so which is way more simpler and easier than the former default APIs, which were fix APIs, right? So if you're not a, high-end techie, then the fix would be slightly more tricky for you to start to develop a fixed adapter as compared to create a platform using REST API. So career skills. So this was something where we got huge number of queries, and I tried to limit them over here, but I also wanted to keep some of the interesting ones over here. And I do think that career and skills that are quite a wide domain for, especially for the most of you who are looking to look or learn on this trade of algo and quant trading. So the first one was pretty interesting. This one, I want to know, how did Rentech, Renaissance Technologies, earn such a hefty amount of money from the market, and is that possible today? Now, the money that you make in any business, it looks very straightforward and very obvious in hindsight, that of course that is what you're supposed to do. But that's only because those who made a lot of money already made that very clear that that was the way to do, and they have already exhausted those opportunities, right? So that's there. Now, that's what happens with anything tech, right? Anything on the which is tech heavy, you will see that. And Renaissance Technologies, they, of course no one knows what exactly they did. It's a secret sauce. Even the big fat book which came in, it just talks about the interviews with different people, but not the guys who were at the helm of things, right? So they are not talking about Jim Simmons, but other guys. But in general, for a business, I think, and that's more relevant. You need not look at how they made money, because that's already done, and what they're doing, they're already doing. And it might be a wrong place to start off with challenging the incumbent in the thing by doing the very same thing that they are doing. You have to do it something in a different way if you want to make a mark or get into the industry. Now, the thing is that for any business, and it's true not just for trading but for anything, uh, you need to have certain competitive edges, right? So this is something that I repeat very often, but I think I cannot repeat it often. So if you have a business, if you have say you're into aircraft manufacturing business, right? So there will be a slight hint of technology and the patents that you will need to get in or get through at any point of time. Okay, but is that all? No, there is a lot more than what you will than that technology and the patents. There'll be a lot more other competitive advantages that you will need. Leave aside the rocket science business or aircraft business, even the basic business like a grocery business, right? So you need to have certain competitive edges in terms of what your placement is, in terms of where are you based, what geography you are in, right? Location of your shop, right? What is your supply chain, what are your return terms, right? So how what is your credit terms, all those things, and how many other players are there in the same vicinity, right? All those things matter. If you have one competitive advantage, you might find it difficult to succeed, especially if it is a crowded or a competitive space. If you have two, you have a chance. If you have three or four, that's amazing. If you have all of them, you're Goldman Sachs, right? Or a national Rentech, right? So that's what is there, which is getting those competitive advantages. Now, when it comes to trading, what are those competitive advantages? It can be the strategy, right? So basic strategy, the core of the strategy, or the things related to strategy. That is, how is your infrastructure in terms of testing the strategy, how closely you are able to test your strategy so that the performance in the back testing mimics the actual market performance as well, right? Um, what is the what are the execution algorithms that you have for your strategy, right? Then there are other non-strategy related things as well, which is, say, how fast your trading systems are, or technology, or access to infrastructure. Do you have high-end infrastructure? The kind of cost of capital that you are able to get money at, right? Are you able to would you be able to fight off with someone who is just looking for peanuts or very small percentage of return because their cost of capital is very small, right? So are you able to compete them off? Do you have a good network in terms of any changes, any new things which are coming in? You are getting to know them through your network, right? How well are you in terms of your corporate structuring? Whether you are some entity which is more friendly to the taxation laws in terms of more tax efficient or not, right? How the back office and the risk management is being managed, all how the bank relationships are, all those things matter, right? So you got to have ultimately the idea is that if you want to challenge the biggies in the market, you need to keep on acquiring more and more competitive edges through your own skill upgrade or through inorganic acquisitions or through by buying them, whichever way it is, right? So that's very important. So that's there. And then the kind of skills that you need for algo trading are essentially threefold, to put it very plainly. One is your statistics and econometrics, so which is understanding of statistics, statistical models, how getting understanding of how to treat different time series, analyze them, as well as using them uh, for the time series forecasting itself, or even for your volatility forecasting, or different like arch models that use for that. A lot of essentially using statistics, putting a hint of statistics into whatever you do. And that is important. Why is that? Because once you have the power of statistics at your end, your odds improve. Okay, the odds of success of your strategy improves, because till the time something is a hunch, it's not backed by data, it's difficult to have faith on, right? So when the market becomes challenging, and mind it, it will be challenging at some point of time for you as a trader, right? If you have a model which is well tested statistically, it will be far more easier for you to have the faith at that model as compared to having the faith at your hunch, right? Your hunch might be more precise or more accurate, but if you're not going to have the faith at the challenging time, you're going to lose a lot, right? So that's the problem. So statistics help you solve that problem first and foremost. Okay. And of course, that is if you are not a believer in data. But if you're a believer in data, then of course it practically it also improves your odds of success, right? Second is financial computing, which is programming languages, as well as the overall understanding of the technology as well. So technology would include your network management systems, all of those things as well. So that's important. There, Python, as we saw, is the thing which is more relevant for most of the traders, right? And next is more on the lines of the quant trading and the financial markets, right? So different models, different trading models which are out there, and having a good sense of financial markets and the overall market microstructure. So these are the key things that you need to become an algo trader. And of course, these are the basic groundwork that you have to do. After that, of course, you have to go deeper and deeper. But yeah, it's a good start. It's a great start if you get a hang of those three things. Are part-time job opportunities exist for algo traders? So that was another popular question, and especially given the context of COVID-19 and the lockdowns and the work from home, which has been becoming more and more popular across the globe. But yeah, there are more and more opportunities which we are seeing, like in EPAT also there are opportunities which keeps on coming. I think we have 200 odd placement tie-ups across 12 countries. And what we have seen is that most of the most of the firms, they are now offering work from home for most of their profiles. So yes, I think that is happening now. And the part-time job opportunities, they are generally more related to the research part of it than anything else, because in part-time it is less likely that you will be asked to create something which is IP sensitive, intellectual property sensitive, but from the research perspective, where you are working on a part of the problem, then yes, that is there. So that's there. And another popular question is, non-engineering background people, can we reach a level to be able to write algo code? And I see a lot of questions also here on the chat, which is how much time does it take, and to pick Python, how much time will it take? So the answer varies depending on your background. If you are totally from a zero programming or zero background, where you would have not worked on the symbolic logic or other things as well, it's going to take time and effort, and no amount of reading or watching something is going to teach you that. It has to be hands-on, right? So you have to try things at your end when it comes to languages. Now, the good part is that it the new languages like Python, they are not as complicated as the previous languages like C++, right? So they're wonderful languages, C++, Java, all these languages are wonderful, but for a non-programmer, they were a bit of a challenge to learn, right? To pick. Python is a lot more simpler, but it will take, so from what we have seen, depending on how much time you are able to put in, it will take few months to a couple of years to get proper hands-on into the on the programming side of it, right? But we have seen people coming from non-programming background picking up Python in a matter of 2 to 4 months, 2 to 5 months as well, and creating whole working trading systems, not just the trading strategies itself. But it does need a huge amount of effort and a lot of pain and a lot of frustration and a lot of happiness when the things work. So so that's all part of learning any skill, but more so programming a programming language as well. So so that's there. So typically the EPAT program, like I think I see a few questions on the chat as well around this. The EPAT program is 6 months, so it does not say that okay, at the end of 6 months, if you're coming from zero background in statistics and programming and trading, you will reach to expert level at the end of 6 months. No, but before the start of EPAT program, you get exposed to the different primers and a lot of study material and the guidance which you get from the team before it starts. And once it starts, then you have 6 months which are totally dedicated towards picking those skills. If you have zero background, you need to have build some background even before enrolling, or before the batch starts at least, right? So that will be there. The resources are there, but you have to spend some time on that. And later on, during the spread of 6 months, you get a structured inputs or structured instructions from the knowledge gathering perspective, which makes sure that you reach a certain level, right? So if it is 1 to 6 level or layers, you reach at least 2 or 3 or 4, right? So depending on what your background is. If you already have a background, then you are expected to reach level 6 directly, as in over the period of 6 months. So that's there. But yeah, the idea is to structured learning, and the guided learning helps you cut across the learning curve by a few times, at least as compared to doing it in an unstructured fashion. So that's the idea of the program anyways. Okay, I want to start trading in FNO by leaving my job. What are the basic requirements of infra besides skill? I think there are a few links that probably the team can share, or we can share with the participants, interested participants separately, where we talk about what is the kind of infra that you need. But if you don't have proven models or a proven ecosystem in place already, then it is not suggested that you leave your job and start trading FNO, and especially FNO for the international participants. It's for the global participants. FNO is futures and options, very common nickname in India. But FNO, if the futures and options is slightly more trickier, the leverage products, if you don't have a trading background, I do not recommend. Unfortunately, most of the people do start from that, especially in India, but that's not an advised place to start with. Futures and options, it's way more trickier as it looks, and it's better to start off with the equities and then move on to FNO as you get a better understanding into the financial of the financial markets and of the trade of the domain basically. Okay. I heard that a master's or doctorate degree in financial engineering is the exclusive path of entry to algorithmic trading. Is it true? In developed markets, absolutely. For the big firms, in the direct trading roles. Okay. Now, if you are looking at, there are lots of different roles which are available, and lots of different types of firms which are available. So we do see the firms which are operating in the HFT space, or in the Algo and Quant space. They do look out for the non MFE guys, non PhDs as well, in their setups. It all depends on what is the requirement of the firm, right? So if the requirement is not something which needs a PhD level understanding of the theoretical understanding, then no. If it is more hands-on, more practical, then they might not need that. If it is more on those lines, then yes. Sorry. So that would be needed. I'm 16-year-old old in the UK and would love to become a quant when I'm older. What things can I learn or do to make me stand out more as a candidate? As I said, statistics, financial computing, and quant trading and financial markets understanding. So these are the three things that you need to master on, and you start at 16. I'm sure if you it would be the right time to evaluate whether your love for the markets is true or not. But never mind, it's you're very young, and you have a lot of time to experiment and try things on across the domain. On a candid note, I would not, even though we are into Algo and quant trading and we are talking about Algo and quant trading, I would definitely suggest that please do try out other things as well. At this age, it's important that you get exposure to different aspects, be it hardcore technology, or data science, or marketing, or many other things which are there. Do give a try to all these things, and see if the financial markets are really your calling. If it is, wonderful. We would be really glad. But yeah, I think that's my suggestion, that to try out and get exposed to as many things as possible. So that would be really helpful. I'm currently pursuing MBA in finance, and I'm fascinated by algo trading, but don't have a coding background, nor proper market experience. I want to know about the job opportunities I can pursue in this field after the algo course along with my current MBA. So as I said, that if you have the skill sets, especially those three things, then there would be certain opportunities which can come across for you to get started on it. And as you develop more and more, so coding is something that you will need, right? So it's not something that you can do away with if you want to succeed in this domain. Most of the traders, even in our own setups, almost all our traders do have a very decent level of understanding of coding, and they do create their own strategies as well, right? So develop their own strategies. So that's important. Even if you're going to just manage people, you need to have a decent understanding of coding, because you will need to communicate that to your coders, right? So you need to both of you would need to understand and get into each other's shoes. So that's important. So that's the end. What are the career prospects for someone who has experience of 10 plus years in the industry? So that's, I think, most of the people in the industry do have more than 10 years, honestly. In fact, most of the people who do EPAT program, they are typically 5 years to 25 years of work experience. So that's there. And we do see that the biggest challenge that comes in is that if you don't have any background in this domain, and you are looking to make a career in this domain, and you have a significant amount of work experience, you're already pretty senior, then I think the challenge that comes in is that the opportunity cost, that you might not be the skills, if they are not relevant, at least not visibly relevant for the algo quant space from the hiring firm's perspective, then it can be challenging in terms of whether you have to give up some opportunity cost or not. So that's the challenge. But what generally works is that to take up freelancing projects, or work on few things where you are contributing to the open source ecosystem, or some way where you are able to showcase that what you are doing, and try things out as well, and then pitch for that switch using the collective skills that you already have, as well as the skills that you have learned in this specific to this domain as well. So yeah, so um, that's there. And yeah, there are applications of ML in trading, but before we go to that, let's have a few questions from the audience as well. Rohan and Pawan, if you have any specific questions that you think uh, I may not have covered, please do highlight. I'll definitely cover them as well.
Yes, for
And
sure, for sure.
yeah. Do you have information on rule-based engine versus C-based? So, Kevin, that's complex event processing engine based. C-based is CEP, complex event processing engine, which was discussed in this session. Sure. So, so I think we do have certain blogs which might guide you towards that. So we'll share with you certain links which can be of help. I think I would request the team to take a note of that. Um, so, all right. Okay, which global certification does EPAT has? Okay, so EPAT does have some bit of, so EPAT is accredited by CPD in UK, as well as it is also uh, they recognized under FTS by Institute of Banking and Finance in Singapore. And yeah, so there are few industry bodies which recognize or acknowledge EPAT. And then, of course, there is a wide range of the institutions and firms who are who collaborate with us for different things, including different education institutions as well. Since EPAT is the first, you can say the proctored or verified certification in the algo trading space, so we were early to the domain, and that has helped us in making sure that we are able to contribute a lot more and have some leg up on that. Okay. All right. I am a full-time trader. If I want to start my algo desk and no idea of coding, should EPAT is for me. If you're a full-time trader and you want to start your algo desk, if you don't have a coding background, you can get started with coding. There are a lot of resources in the QuantInsti ecosystem as well, like open source books on Python basics, a 300 plus page book that is, as well as the free course on Contra. So on Python for basics, that's been used by tens of thousands of people to get started, especially the traders in the Python, because it's highly interactive and it starts right from scratch. So helps you get up to certain level, and that helps because you also have so like in Contra, you can go through certain specific topics if you want to pick on that. In EPAT, you get more structured in terms of the overall comprehensive ecosystem. So yeah, so in fact, in EPAT, we have like there's a 50th batch which we are starting next month. We are really excited about that, and for the Golden Jubilee batch. And even in Contra, we have seen some quite a bit of users who have been able to get help from the, I think, 30 plus courses on Contra, and there are a lot of interesting stuff over there with the top global experts who have created their courses over there. And yeah, it's a unique platform. Do have a look at that if you have not seen it already. From the learning perspective, there are a lot of free courses as well, so you can get a sense of how it is. It's extremely hands-on, so that's a differentiator, and yeah, so that should help. Okay, I would love to do it, but I am okay. Okay, so the question is that I have less. The money is a challenge. We do understand that, and we definitely um, try our best to support in whichever way we can. Like in EPAT, we do have certain scholarships which are available for the emerging markets as well as for full-time students. And even if you're not there, so we for certain geographies, like in India, we have the zero cost EMI options as well, so where you can spread it across 6 months to 1 year. Similar things are there in Contra as well. In fact, in Contra you have a Pi Day sale which is going on, I think almost 60% off or something like that. So we do come up with try to come up with different promotions as well as the different solutions which can help it make it affordable. So that's there. But yeah, we definitely are trying to do our best on how much more we can do on that side to make it to help as many people as we can.
Right.
Okay.
So Nitesh,
Yeah.
there's one question on EPAT which I've received. So it goes
Mhm.
like, will we be getting support post learning? As I've heard that programming language takes about a year of effort to get master in, and EPAT is just 6 months. So I might hit a limitation in this case. So what should be the ideal path for me?
Oh, sure. So the way EPAT has been structured is that 6 months you get the handholding from a dedicated support team while you're doing the program. You give the exam, which is in-center exam, or because of COVID now it's also happening online, but it's still proctored. So which means that someone is there who is checking out on you from the proprietary team, who is the global leader, one of the global leaders in the exam conducting. So they conduct for the EPAT exam. Once you clear the exam, you get the certification. Once you get the certification, you become an alumni. And once you become an alumni, you're moved to the alumni branch, which means that there is a dedicated alumni team which is looking after for you for all your queries, for all your whatever guidance that you may need. And that's something which is there for lifelong. And now the idea is in fact, the next big challenge for us is EPAT is a very, very rich community of traders, thousands of people who have done EPAT program right across the globe. Now the idea is how to, and these include like really, really all sort of background of people, like really amazing chaps. So very, very senior, very, very junior, all sort. Now the idea is that how to put that community in action in a way that they are able to help each other and we are able to act as a catalyst. So that's something, that's the challenge that we have taken up and graciously accepted, and we're working towards that, and we are creating different the communities as well as the chapters across the globe, and the meetups which are COVID, of course, put a dampener on that. But yeah, we are doing things as possible virtually, as well as once the hopefully after a few months, once the things settle, then more in person stuff as well, and more and more guidance and opportunities for the alumni. So most of the things that you have in EPAT, they are lifelong. So the content you get access to the most updated content. Okay. So that's something which is lifelong, which means that even those who did EPAT 10 years back, they had gone through C++ modules and other things. Now Python is what rules the roost in the industry. So they have access to all the Python modules and everything, the most updated content basically. So learning doesn't stop, and as the industry changes, EPAT curriculum also is closely and tightly aligned to that, and you as a alumni get benefit of that. And then the alumni guidance, the faculty guidance, and the placements, placement support, career support. So career support is separate from placement, which is, it's not just about job, but if you're looking for a vendor, for funding, for broker, anything in different parts of the world, the career team takes care of that. So tries to help you on that part. So that's there. Yes, Eyal. Eyal, I know that you are one of our esteemed alumni as well. So yes, that is there. Okay. All right.
Perfect.
Okay. Great. So let me run through the applications of ML in trading part as well, because there is a lot of interest on this side. Now, I think the machine learning, it's a bit of a challenge for a lot of people to understand what all this is about. Now, machine learning, is it something which is very new? Not really, but the applications have become way more nuanced, as not nuanced, but more popular as well as more visible in the recent times. But the work has been on for a very long time, and the essentially it's the statistical models, right? So ultimately it's that which can be used for specific purposes, which we have put across as machine learning algorithms, right? And the way machine learning works is that it's about creating models which can train themselves, or you can train them, or they can train themselves. If you are training them, that's more supervised. If they are training themselves, then it's more unsupervised. Now, what do you need for training? What you need for training is a variety of different skill sets to an individual, right? Now, for a machine, these different things, so-called things, are called features, right? So if you have more number of features, you are able to train them in a better way. Now, once you train them, what are the different ways in which you can use them? You can use them for creating strategies, of course, for predicting what is going to be the next tick, okay, or what is going to be the tomorrow's opening. So all those things you can do using machine learning, but that's not all. And in fact, there is a lot of challenge that a lot of people face in while they are trying to restrict themselves just to this by using the certain time series data of the market data, essentially, right? So bid ask or open high low close or whatever you're using. Now the challenge is that as we discussed, that you need a lot of features. So now if you are just looking at the price time series data, it's not a lot of features, right? So there are very few very few headings basically that you have in your data set. Now, if you want to create really amazing models, what you can do is that you can do some feature engineering, which is you can come up with a lot of indicators and other stuff and use them as a feature as well for training your models. Or you can also use alternative data, right? So where you are using uh, the different sources of data, be it it's a vast world out there actually when it comes to alternative data, both for the models which are focused on fundamental investing, as well as in the real-time trading. Sentiment is, as I mentioned, is something that has been taking leaps and bounds in this industry. The kind of alternative data that you can get from there, as well as many other metrics which you can use as the features. So that helps. But apart from that, what you can also, where you can also use machine learning is a lot actually, is in the portfolio and risk management. That's another place where we are seeing massive adoption of machine learning in managing how to select the right size of portfolio, or the right parameters, or the right audience for a portfolio, right? So the right kind of factors that you can use in creating that. So that's something which is happening quite a bit, and that would be really interesting for you also to explore if that is something that is of interest to you. So that would be really very useful. Now this is, yeah, so one of the last question categories that we had: what is the profitability of algorithmic trading? Now, as I said at the start of the session, and that's why I kept it at the end, that I wanted to complete the circle, is that algorithmic trading is not really something which is a different kind of trading in itself, right? So it's just a way of executing things, or way of approaching financial markets trading in a slightly different way, right? When you're using stats or different econometric methods, they're saying that it's quantitative trading. Most of the quant models of quant trading happens to be using algorithms, or are mostly automated. So it gets executed through that. But in general, if you say that how much money can I make, what are the returns of algorithmic trading, the problem is that the same question can be asked from the perspective of that how much is the return from fundamental investing, or how much is the return from technical analysis trading, right? So it totally depends on who is creating that, who is building that. We saw questions related to Rentec, which has generated crazy amount of returns, crazy amount of returns over a very long period of many decades, right? And then we have also seen a lot of firms which has gone bust in no time, right? So the range is really wide. Now, what are the ideal returns to chase? That's something that we do have a good answer, a better answer on, and that is that most of the quant or algo trading strategies, or actually on any strategy, to be honest, those which are investable to a certain size, okay, at least, generally would have something like double-digit percentage returns annually. Okay, with a Sharpe of 2.5 to 3, something in that range. Minimum 1.5 is what most people will expect, unless it's a beta oriented strategy. Otherwise, 1.5 to maybe 2.5 to 3 at least. So that's the range. If it's 3, amazing. 2.5, okay, pretty awesome. 1.5 to 2.5, it depends on other factors as well. So which means that your standard deviation, your risk has to be near about mid single digit percentage and single digit percentage drawdown. So stability of time series of your returns, that's important. The risk weight returns, that's important. So if you have that, the chances are that you will do pretty good in terms of your investors will be mostly happy, and you should be able to do good for yourself as well. Generally shy away from anything which says that you will get monthly X some percentage returns or 100% annually. I'm not saying that those things does not happen. They can happen, but most likely they will have a decent amount of risk which will be involved in them. Or if there is no risk from the market perspective, that's also possible, then the entire asset class might be at risk, right? So it's important that whatever you are generating in returns, you're able to envision that it will be coming back to you as well. So that's important, especially for the newer assets. That's often true. So yeah, so that's there. I think we try to cover as many questions as possible. We'll take a few more questions here before we end. We have overshot the time a bit, but that's fine, I think. Let me just pick up a question, or Pawan, if you have anything flagged, please let me know. Otherwise, I'll just
I think there
address it.
was one from no, they mentioned that he is 50 plus and has been trading
Mhm.
since the past 2 years.
Mhm.
So, would there be any career opportunities for him post
Okay.
completion of EPAT?
So it depends what you have been working in. If you are a full-time trader, I think I see the question here. So you have mentioned that you have been full-time trader since 2 years. Uh, so that's great, but it depends on what your background was prior to that. If it is something which coincides with the requirements in the industry, that's then yes, there can be opportunities, because we do get a good number of participants who are 50 plus, but everyone has a different objective. Of course, I'm not saying that everyone is looking for or go for the job or career shift, but yeah, I think you can probably share a bit more about the background, and will definitely suggest if it is something that can be uh, can be helpful to you from purely from the job and career perspective. Because we do have people who have been placed who are 50 plus who got placed, but and honestly it depends on the background, and every case is different. So would definitely be keen to discuss it separately. I am a CMT level 2 candidate. Would like to know your insights about combination of CMT and EPAT, and the answer holds for CMT and EPAT, or CF or EPAT, or any of the other combinations. So yeah, basic simple moving average strategy or a crossover strategy. We do take that a lot as an example, as an illustration, but that is more from the perspective of driving home the quantitative aspects of how to test out strategies, how to create strategies, how to backtest, benchmark. Because what happens is that a focus has to be there, not just on the strategy but more on how we are approaching it. Say for example, a lot of people, when they create models initially, they end up curve fitting everything. So which is that, okay, I have created this model, now whatever is the parameters which can give the best returns, I'll go and trade them in the live market with that awesome looking combination. Unfortunately, in most of the cases, you end up losing a lot of money, because what you have done is not back testing, you have done curve fitting. That's not the objective. You have to divide the data into in sample, out of sample. You have to ensure that your curve fitting or whatever you're doing is happening in the in sample data. Then you have to compare the performance to check for the robustness of the strategy in the out of sample data, which is where you have not curve fitted the data, you have not curve fitted your strategy on. So all those things have to be there. So those aspects are very important, which are very well covered in the EPAT program, and that ways does complement most of the other avenues, you can say, of trading. But in EPAT, the more focus is on the statistics part, on the financial computing part, and the market microstructure part. Okay.
Understood.
Okay.
So yeah, so that pretty much covers all of the question. We'll just take one more question before we conclude the webinar. So there's just one question from Srinivas, which asks
Okay, the latest
if
one is from Srinivas Bho, which is, do you cover both options, buying as well as selling strategies in EPAT? So we do not look at it from the buying or selling side, but more in terms of managing the Greeks part. So Dr. Johan Sinclair, who is like, I think on more than I think almost 3 decades of 25, 26 years of experience in options trading. Very popular author of option books, and I think he was also the principal of Tarleton Capital in Chicago. So he covers in a very detailed module about options trading, and it's all from the perspective of what his own insights has been, how his own experiences has been. He's a full-time options trader even today. So it's more of getting that into reality, and the idea there is not to cover the specific strategies as such, because it does not know, there are no strategies in the world, right? So it's more in terms of getting the concepts right, and then you can um, give shape to your ideas, to your thoughts, and put them across as your own strategy. So that's the idea, and that's the perspective where it is covered from the options part, which is mostly from the understanding the volatility, understanding the different Greeks, how to manage that, and when you're trading something, what exactly you're trading. Okay, when you're trading options, you're not trading direction. So that's something that is important to know. The direction is inbuilt in it, yes, but that's not the reason why you generally go for options. So all those things are covered pretty much in detail on that in the module, option trading module. Okay. Okay, so I
awesome.
think we have two more, but yeah, I think I see a lot of questions being answered by you and Rohan. Thanks, Pawan and Rohan, for that. But yeah, I'm sure there are a lot of questions which are left out here. Our apologies for that. We did want to cover that, but yeah. There are practical constraints on that, but we'll definitely love to connect with each one of you separately and address the questions, any questions that you might have, and help you in addressing them, and anything that we can do to help you in this wonderful domain of quant and algo trading. We are really keen to do that. It's the domain that we focus on across all our ventures, and we are really passionate about it. So please do connect, and we'll be more than keen to help you in whichever way we can.
Perfect. Thank you so much, Nitesh. That was a really valuable webinar, and I think a lot of new concepts and questions were answered about this field. Thank you so much, Nitesh, for this wonderful session. And I would thoroughly would like to thank the participants as well for making such a hit and making it really interactive. And Nitesh, we would want to have more such sessions from you in the future and in the near future, okay? So that we can enjoy such sessions from you, right?
Thank you. Thanks, Bhavan. Look
Yep.
forward to that. Thank you, everyone. Thanks. It was
Yep.
really amazing interacting with whatever questions I could answer. I think it was really great. I really hope that we were able to address some of the common queries as well as some of the specific queries from your end. But yeah, we definitely look forward to be in touch with you again very soon.
Perfect. That's great. Thank you so much, everyone. It was a pleasure hosting you all, and we will be seeing you in the next webinar. Cheers.